In the next 10 minutes, I'm going to take you through my first trade of the year, a trade where I could have made lakhs of rupees if I didn't follow my rules. However, I decided to follow my rules and ended up with a break-even trade. Let's break down exactly what I did right, what I did wrong, what I should have done better, and what I could have done to actually come out with profits, or did I just follow my rules perfectly all right? This trade was fractal. I took this trade, as you can see, on the 13th of April, right? Now, like we do with all of these videos, let's go back all the way to the day that I started taking this trade. All right. Now, what's important to notice in this particular trade is that firstly, if we have a look at all of our factors, yes, the small cap index was above the 10-day at this particular point of time. This stock is an IPO base. So, of course, the stage two has not been formed yet. But since it is an IPO base, what happens in an IPO base is that they go through something called price discovery. All right. Now, price discovery is something that is essential for every stock, and every stock has this. However, since an IPO base is a young listing, what happens in this case is that there is no supply and demand to the large extent because there has not been a large duration of time that a stock has gone through that cycle of supply and demand, and hence price discovery to the upside or to the downside can be extremely rapid. Now, what I want you guys to understand is that the small cap index is above the 10-day, so the environment is good. It is not in a stage two yet, but of course, that's because it's an IPO base. Doesn't it have a prior up move? Of course, because it's an IPO base. So these two things are invalid. Does it have clean price action? Yes, there is very clean price action in the stock. There is no way where the stock made me feel like it's a choppy stock. It's a long VCP base, which is nice. I can see some high volume bars, 250 crores, so has good volume as well. Pivot was tight with the 10-day moving average. The sectoral strength of this particular stock was also decent at that particular point of time. And it's also important to note that we were in a one-way lockout rally. If I take you to where the CNX small cap was at that particular point of time, you can see that we had gapped up and continued moving in strength. Hence, this trade was taken. All right, let's go back to fractal now. So we can see sector strength good, price action good, prior up move stage two not considered in this case, CNX small gap above the 10-day, and liquidity concerns are all clear. All right, now what happens in this particular trade? Now, I've made a video before as well about the trade management rules that I follow. However, I have a very clear rule, right? If this is my entry point, okay, from here, and let's say this is my stop loss and this is the quotient of R. From here, the moment I hit 2R, right, which means two times my risk, my trade becomes break even. Very, very simple rule to follow at all points of time. All right, if we see what happened in this stock, firstly, what was the stop loss in this case? Let me just get rid of this. The stop loss in this case was 3.1%, which is within the 5% range. So that is also fine. And let's see what happens in the stock. Nice. We got a breakout. Next day, follow through action. Next day, pause. How much is the stock up till now? 6.38%. And my stop is 3.1%, right? So 3.1 into 2 is 6.2%, and the gain was 6.38%, which meant, oh, sorry, which meant that this trade had now become risk free for me. All right. Once a trade becomes risk free, automatically my stop loss, which was placed at the low of this day, comes up to my cost in this stock, which I got exactly at the price that I wanted, which was 838.5. Now, let's see what happens the next day. All right, a squat from the bottom, still no abnormal action in the stock, and then a big breakdown of 4.2%. As you can see, the high of the day was 838.5 and the low was 835.05. Hence, the high was broken, my stop loss got cut, and then what happens in the stock? A big, big bounce up. All right. So again, taking you through it, stock goes up, hits my backstop at break even because the 2R rule had been successfully accomplished. So I get out of the stock at cost, which is a break even trade for me. And the next day, the stock bounces right back up. All right. Now, what is important to note is also some context. All right. So if I tell you about some context behind this trade, right? Like I said, first trade of the year. Very important. Okay. Secondly, no cushion at this point of time. No cushion. And thirdly, rules are the most important thing in trading. Okay, now, since this was my first trade of the year and I had no profit cushion to look back on, of course, my first goal is to make my trade risk free, as it should be for any particular trade that I take, right? So the moment that the stock went up and then reversed heavily down back to my sort of break even point, I had to get out. The next day, no one knows, right? What if the stock continued falling down? In that case, you can't do anything about it. But the stock closed below the 10-day, next day bounced back up. And then what happens? Another move up, and then fantastic action comes in fractal. So this is what we call a bad beat in poker, right? How we talk about poker and we say that that was a bad beat. Similarly, this is a bad beat in trading. It's going to happen time and time again. There's nothing that you can do about it. And you have to almost accept the fact that this is a norm. This is like very normal in trading, right? It's going to happen. It's a normality. It will happen time and time again. But I like the way how the volume suddenly started picking up in this stock. It will very easily have not cracked, right? Very, very barely. Just maybe even if it came to 845 and then bounced from here, that would have also been fine. However, decided not to do that. So in this case, could not do anything. Now, let's say that I did have this trade. What would I do if I had not removed it? Close below the 10-day, then the low of this day becomes my stop. However, did not break it, bounced up, so I would still hold my size, right? Okay, still fine, nothing abnormal happening in the stock. Okay, I'm seeing squatting happening, major squatting. So I will look to book 1/3 at the break of this day. How much am I up? First, let's see that. 20%, right? So it's still fine, nothing crazy here. Next day comes down. Okay, I would have booked 1/3. Then let's see. No problems. Bounces back up. No problems. No problems. The moment I hit 30% gains, I would like to book another 1/3, 25%. That's fine. All right. I think here is where the 30% gain mark would be hit. Yeah, 30%. I'll book another third here and then just let it ride. Let's see what happens then. Okay. Earnings coming soon. That's okay. We have enough cushion. Stock is flat. A big outside day, but that's fine because we've already booked 2/3 of our holdings, so it's fine. And then at this big break, I would have removed everything. All right. So that's how I would have handled the trade if I did not sell. But again, now let's answer some mindset questions. All right. Whenever you take a decision in trading, there are some things to keep in mind always. Now, the first thing is fear, greed, regret, right? These are emotions. As a trader, is my job to stay with these emotions or get rid of these emotions? It is to get rid of these emotions. All right. Point number two. If my rule says you cut at break even after 2 hour, what will I do? Will I decide to not do that just because this is one rare case? Absolutely not. Follow the rules. All right. Number three, are you going to take one trade in the year or are you going to take 1,000 trades in the year? And if you're going to take 1,000 trades in the year, which we all are, then what is going to be the probability of your rules working? Right? Is the probability of your rules working 10%? Then you should not follow it. Is the probability of your rules working 50%? Then you should probably follow it, right? And if it's 75%, you should follow it without a thought. All right. Number four, which is an important learning from this particular stock as well, is that IPO bases are volatile in nature, and that is given, right? We know that. We've seen that time and time again. They are very good on the upside, but also they can be good on the downside as well. So be careful. And lastly, the most important thing is that setups don't make you money, right? Setups never make you money. The environment does. Always remember this. You are expected to fail 50% of the times. A break even trade is actually a success. Why? Because the moment you enter a trade in the stock market, you have already put something on risk, which is guaranteed to go. Okay. So you have to enter with the idea that this is guaranteed. My risk multiple, my 1 hour is guaranteed to go. However, if this hour becomes 0 hour, right? That is a win already. That is a win. So if you cut at break even, you're doing good. If you get profits, you're doing even better. right? So, all in all, do I regret my decision in Fractal? Not one bit. Why? Because right after Fractal, I caught Cupid. And I know that I could have also caught a losing stock, but that would not change the way that I trade because I know that my rules over time, over the next 30 years, are going to make me supremely rich, right? So, why would I decide to not follow my rules this one time? Because what happens is that, and this is just like we talk about, just like we talk about money, right? In 10 years, what it's going to be? Mistakes as well compound. And this has been seen time and time again. And I have seen this with a lot of peers of mine who are way elder than me. And I've learned from their mistakes. Do not compound your mistakes ever. Never compound your mistakes, right? Once, okay. Twice, okay. Three times, no, that is wrong. You don't want to make the same mistake 3 to 4 times in a year, especially when it's something silly, right? Something like not following the rules, something like, oh, I just took it out of emotion or out of FOMO or things like that. It's okay. It will happen time and time again, here and there. However, avoid it to happen multiple times. And the best way to do that is to avoid screen time. All right. So this was a trade that I had taken in Fractal. This was a trade that could have made me a lot of money, went up 30%. I could have made multiple lakhs of rupees in this trade. However, what the key learning from this video is rules first. That's it. These kind of bad beats will happen. It's all right. It does not matter. And trading is not all, it's not all dollar signs. Never. You have to understand that this is very normal in trading and you will have such trades. And the quicker that your brain sort of adapts to that mindset, the faster you will start making big money in the markets. That's it for today's video. If you've liked it, please like, subscribe, and comment. It means a lot. And also, if you would like to learn with me and other budding traders, you can always decide to join the Telegram community. You will find the link in the description box and as the pinned comment. We are growing and we are looking forward to having more and more of you guys join. It would be amazing to have you there. Constantly conducting sessions and daily live videos as well. So that's it for today's video. I will see you guys in the next one. Trade well and respect the rules because the rules is what matters in the long run. Don't look at this business from just a month, 2 months, 1 year. Look at it as 2, 3, 4 decades of your life and how you can maximize your compounding and make so much money that the next few generations will not have to really think about it. And also you and your partner and your family can really enjoy life. Thank you so much. And I'll see you guys in the next one.